Hey guys, what's going on? Welcome to our end of the market update for Tuesday, March the 30th of 2021, and it has been a choppy market as of late, and so we're going to review the Nasdaq and the S&P today and see what's going on there. So if you are in the Discord group and if you've been watching my videos, you'll know that coming into today, we were anticipating higher moving yields. So with that moving yields, um, that allowed or that made the tech sector or the Nasdaq in this case pause its rally a little bit and sort of pull back into what appears to be the third wave or the C wave in the wave Y. All right. So the way I'm looking at this, guys, is that there's a chart of the Nasdaq. We've established this downtrend line since the highs of February the 12th. Okay, and I'm gonna highlight this again for you guys. So we've originated the trend line there, and we failed to break out of it in this zone right here. All right, we were trying to come up against it, but failed to do so, and we pulled back. So when we spoke yesterday, we were looking at this as a potential. Um, this is what I'm going to do right now. So we're looking at this as a potential ABC, right? So down in A, up in B, and down in C. And this was our alternate count in that if the yields were going to push lower or retreat from their highs, that this was wave one, down in two, which was something we were expecting, and then we were going to push higher. But what ended up happening was that yields kept on going higher as we expected, and this is the count that I'm favoring now. So in a complex correction, right? Complex corrections are made up of three substructure waves. So we have down in A, up in B, down in C. We then move up in A and B, A, B, and C to form wave X, which came into resistance. We sold off in A, we're now up in B. All right, again, we rejected the zone, and now we're going to try to push lower. All right, I'm gonna take you guys into the bonds real quick, the 10-year yield, to sort of confirm that wave count. All right, so yesterday when we reviewed this wave count, we were March 29, we were here, so we were anticipating a move higher into break of the previous high, which was 1.75, and so we did. So out of wave four, right, we went up in one, down in two. We gave an impulsive structure into wave three, and now we corrected into wave four. Now wave four, right, this wave count will be invalid if we break this zone, but so far it's still hovering above it. So given the fact that wave two was a sort of directional, wave four, given the guideline of alternation, we can expect that wave four will be a little bit more of in the sideways action. So perhaps another maybe a push higher tomorrow in the Nasdaq, but not too sure that's going to happen. So the case is this: if wave four anchors somewhere in this zone, we can expect that wave five can finish up in the 100 extension, right, of the extension from wave 3 to 4, which will give you anywhere between the 100 to the 1618, which is 1.9 to 1.8. Not to say that this is where it will top and then we roll over, but analysts out there are saying that we may see a 2% in the 10-year yield, which is huge, and that will mean that the Nasdaq and the S&P will continue into a brief retracement. So going back to the Nasdaq, guys, we noticed that if that would be the case, then we can expect price to fall further down into what appears to be the 12,550 price range or price target for the Nasdaq. Okay, guys, so perhaps tomorrow, if we do see a sideways consolidation in the 10-year yield, we may attempt to break this resistance line, but we will fail once wave four is complete on the 10-year yield, and we will head lower. Unfortunately, that is the case. That's what I foresee happening. But if not, then we are always ready to try to tackle this. And the way we will is that we will definitely call this wave two complete here, down in A, up in B, down in C. Up in one, we are printing wave two, which it's not anchored yet. So let's see, wave 2 could be which it's within the price zone or the Fibonacci zones. All right, so anywhere between the 38 to the 50, and as you see here, we've been able to find support. So once this is complete, we could see the break of this resistance into the wave 3, and off we go. So just keep an eye out on that. Keep an eye out on the 10-year yield, and as that is your indicator for the downside on the S&P or the Nasdaq in this case. So over to the S&P now. The S&P has been trading in a rather frustrating manner, but that's okay. All right, and I know that some of us are looking to get on trades. We have entered a few in our Discord, and it's been rather challenging, but I still feel bullish in the markets in the long run. And so this is the wave count. From the low of March the 25th, we printed 5 waves up. All right, we then finished this in the ending diagonal into wave 1, and now we're trying to see if we could defend, or the bulls are trying to see if they could defend this zone of support, which was resistance prior to coming. So remember, guys, in our previous videos, we were stressing that 3950 was a key zone for us to hold so that we can break higher. All right, the zone was 3950 and 3980, and as you can see, that zone has been a range in which we are currently trading. So coming into tomorrow, what I anticipate happen is that since we came in down in A, we will go up in B, which is happening now. We may go up a little bit higher, but as soon as we top out, we will fall down into what will be the extension of wave A on B, and that'll give us the 100% to the 1618, which is the price targets are 3936 and 3913, which falls within this zone of support. And so that gives me a little bit of confirmation that if we do fall within this area, that could be a good level of support in a buy zone for the bulls to take control and take us higher. So that is my outlook for this week, guys. And so I do urge you guys and to exercise a lot of patience and sit in your hand, because markets like this is where if you get impatient, this thing will eat you up and spit you right back out, guys. So do be careful. Alternatively, you guys can join our group. It's totally free. The link is down in the description. Just click on it and input your email, and they'll take you directly to the group. And so, also consider subscribing, and please do hit thumbs up on this video so that this content gets out there for those who are also in need of some guidance. So with that, I'll leave you guys, and I'll see you tomorrow. Take care.